Hello friends, welcome back to part 15 of my Tesla earnings forecast video review series for Q4 2022. In this video I'm going to be walking you through my long-term forecast beyond Q4 of this year into next year and the year after that. So let's check in with Loki briefly and see how he's doing. Hey Loki. Oh, keeping his head down. He is not interested in making an appearance in this week's video. Okay, so I just walked you down the page in part 14 of my Q4 2022 column, but if I scroll back up again, we can scroll over and see what I'm forecasting for 2023 and get a feel for what's going to happen. Well, there's going to be revenue growth. There's going to be deliveries growth, and there's going to be revenue growth. There's going to be profit growth. All those things are in my forecast, along with price cuts. I am forecasting price cuts for Tesla vehicles around the world, all the models, because I think 2023 may be a tougher year for the automotive industry as a whole. So I think everybody's going to be cutting prices some to try to move all the vehicles they produce. And so that's my forecast expectation as well. But when you sell more vehicles, even if the revenue per vehicle is lower, if the volume impact is greater than the unfavorable rate impact, then you still have revenue growth. And that's why you see automotive sales, including credits, rising from what I'm forecasting in Q4 throughout every quarter of 2023 with higher revenues each quarter. The same's true for leasing. I've got that rising as well. Then for energy generation and storage, Q1 is usually seasonally a quieter quarter. It's pretty cold in Q1, not a lot of solar roof installations happening during these months all across the world. So maybe a little lower revenue there, and then picking up later in the year to have quite a good Q4 I'm forecasting. Now, maybe some of this, maybe this is too conservative an estimate. Maybe Tesla will beat that. I figure it's more conservative to assume that there'll be some drawdown in energy revenues from a Q4 to a Q1. Services and other, this is going to increase as the fleet size increases. So every year Tesla sells more vehicles than they sold the year before. One of the charts that I reviewed earlier in this series illustrates that very, very clearly. So the larger the fleet gets, the more services and other revenue there will be, right? So those combined make for total revenues to be over $30 billion every quarter next year, with more than $40 billion in Q4 of 2023. So strong revenue growth there. The costs will go along with it. So maybe the best place to go here is to the gross margin percent line. I've got gross margin percent increasing quite a bit next year. What's doing this? It's lower labor costs per vehicle as the factories ramp up more production, right? Because the prices are in some cases coming down. You got favorable mix as the Model Y continues to ramp up in factories that are using castings and stuff, right? So those costs ought to be lower, and then continued efficiencies gained by Tesla with more local sourcing, less transportation costs, ending the wave, reducing the cost per delivery for Tesla. So there's those, and then there's additional sales of full self-driving. As that software improves, more people are going to become aware of it and buy it, and that'll happen more in 2024. I went over an FSD revenue per vehicle chart earlier in the series that illustrates that pretty clearly. So these are the gross margins that I'm expecting next year, from over $6 billion this quarter to over $8 billion next quarter, over $10 billion the quarter after that, over $11 billion the quarter after that, and almost $14 billion by Q4. That is a whole lot of gross margin lift. What happens below the line with SG&A and research and development and restructuring and other? those don't go up by a lot. They don't need to go up by a lot as the production ramps around the world. These are factory-related costs up here in the total cost of sales line. That's where the factory costs are going. These are more like headquarters type costs, so they don't need to rise by as much, but they would still go above $2 billion at some point in 2023, I'm forecasting, leaving an income or loss from operations, so operating income, $6 billion, $8 billion, $9 billion, $11 billion next year. At these operating margins, above 20% every quarter is what I'm forecasting. I don't think a lot of Wall Street analysts see this coming. And maybe it won't, right? Maybe this is too aggressive. Maybe these aren't going to happen because maybe the revenue growth doesn't happen. Maybe the FSD adoption rate is a little slower than we thought. Okay, well, what if they're 19%? What if they're 18%? Okay, well, those are pretty good too, right? Those would still result in earnings growth. So the dollar's worth of earnings would still be higher and the earnings per share would still be growing, right? Interest income should continue to rise if Tesla continues to invest in things that pay interest, short-term marketable securities, for some of their giant cash pile. If it doesn't get reinvested into the company's stock through buybacks, we'll see how that goes, but this is what's in my forecast. Then we've got provision or benefit for income taxes. I mentioned 80% of the $2 billion, I assume, happens in Q4 of 2022. I have the other 20% being declared in Q1 of 2023, and then Tesla would be done with that deferred tax asset recognition. Then the taxes go up a lot because look how high the taxable income is, right? So that's what's being forecast here. I'm including an assumption that this rate will be lower than it would otherwise have been due to the Inflation Reduction Act. So I would have been assuming a 25% effective tax rate on this taxable income, but with the IRA having been passed this year, I'm expecting only 75% that much. So a reduction in Tesla's effective tax rate of about 25% from 25%, which is 6.25%. So that gets you down to 18.75% tax rate. Hope I didn't confuse you saying all that. And then you've got a few minor lines here, and then there's your new GAAP net income amounts for 2023. And while I'm here, shouldn't we also look at 2024? Sure. So let's scroll on over and see what I currently have cooking for 2024. Continued growth. So Tesla will be selling Cybertrucks by this point. And, ramping up Model Y across the world and working on something else probably before the end of 2024. But hopefully FSD will be in really good shape by 2024 and selling to a lot more people at a lot higher prices. And that's what's doing this. Or the subscription rate will go higher and a lot of people will be subscribing. However you want to get to these revenue amounts on the higher deliveries that I'm forecasting for 2024. Continued growth for energy generation and storage as Megapack really ramps up sales to utility providers, solar roof, power walls, all those sorts of things. Services another, more and more vehicles coming off warranty every year in the fleet, so services and other revenue ought to be increasing, giving you total revenue growth really, really big still at this point in 2024, with automotive cost of sales growth coming along with that, gross margin percentages being helped out mostly by full self-driving getting a lot more valuable in 2024 is what I'm forecasting. So more pedestrian in 2023, capping out at only 32% gross margin. These seem impossible, and to other automakers they will be. To Tesla, they're not, if Tesla is selling lots of autonomous vehicles here, or vehicles that are so good as level 2 driver assistance software that interventions are hardly ever needed. I think that's worth a lot to people. Even if you're still required to sit in the driver's seat, I think a lot of people will be buying this if it's really good at driving by this point. And if I'm wrong about that, I will bring these assumptions down, and it'll happen the year after this instead of in 2024 or whenever it happens, right? So that's how you get a lot of gross margin growth, continuing from 2023 levels, past 20 billion, past 30 billion worth of gross margin per quarter, folks. It could happen. It could happen the way I have outlined it here. If Tesla shows signs that they are not going to make it, that's why I revise my forecast every quarter. I've got plenty of time between now and then to take them down, but this is what's cooking in my forecast right now. With total operating expenses not needing to grow by that much. Making higher and higher operating margins every year, and leading to these growth percentages, and leading to these GAAP EPS numbers. So GAAP isn't what gets reported, and it's not what Wall Street cares about. They care about non-GAAP earnings per share. But I've got $1.60 in here, with 45 cents of that being the one-time tax benefit in Q4 of 2022, and the remaining 11 cents in Q1 of 2023. So if you want to know what these two numbers are without the deferred tax asset, if Tesla doesn't take it, just subtract these numbers from it. So you get to, $1.17 here, $1.64 here. But then rising right up, 215, 245, 297, 356, 483, 623, 791. Big, big earnings per share growth. It's only a matter of time before the stock price will have to catch up with the earnings growth, because otherwise the PE just keeps getting lower and lower until somebody wakes up and says, why are we not buying this stock? This is too good a deal to pass up. And that is my video for part 15. So let's check back in on Loki, and he is still out like a light. And I'll say, if you've enjoyed today's video, click the like button, and if you're not subscribed to my channel, go ahead and subscribe to my channel. And thank you to everyone who supports me through Patreon or by joining my YouTube channel, especially my executive producers, Kathy Kitchler and Halter Ferguson Financial, and I'll see you in the next one.